Good evening, everyone.
Good evening.
I would like to call to order the Eastpointe City Council meeting, special meeting of Tuesday, December 6, 2022, and the time is now 6 o'clock. We have roll call, please.
Councilmember Baker,
Here.
Councilmember Curley,
Here.
Councilmember DeMonico,
Here.
Mayor Pro Tem Lucido,
Here.
and Mayor Owens is absent.
Moving on, we'll go to the hearing of the public. If anyone wishes to be heard at this time, you'll have 3 minutes. You can head over to the microphone. I don't see anyone interested, so we'll move on to item number 3, which is new business, and we'll start out with the fiscal year 2020 audit presentation. And we'll head over to the podium.
Okay. Good evening, everyone. I appreciate you having me here today to present the results of the financial statement audit for the year ended June 30, 2022. My name is Tim St. Andrew, partner with Plant Moran, and you should have received 3 deliverables. So one would be the city's annual comprehensive financial report, which is the thick 145-page report, the end of audit letter that's addressed to the city council, and lastly, the graphs that we have up on screen here. So similar to prior years, what I thought I would do is cover some of the highlights from the financial statements. I have probably a dozen pages or so that I can point you to, cover those highlights, and then as we cover certain topics as it relates to the graphs that we have up on screen, I'll also go through those, so we can try to cover those at the same time. And then I'll end with the letter addressed to the mayor and council. So everybody has a copy of the financial statements, right?
Yes.
With you? Okay. So I will direct you first to page 1, which is our auditor's report, pages 1, 2, and 3. And really what I want to point out is on page 1, and under the first heading there, we have opinions. And there's a lot of words here, but really what all of this means is that the city's financial statements did receive an unmodified opinion. So that's a clean opinion. It's the highest level of assurance that we can provide. And it means that the numbers, the disclosures within these financial statements are accurate and can be relied upon by the users of the financial statements. There's also, if you go down to the bottom third of the page, you'll see a heading for emphasis of matter. And what this is telling you is that the city did implement Governmental Accounting Standards Board Statement number 87 this year, and that's related to leases. In years past, any operating leases were really accounted for as the cash was received or dispersed as either an expense or a revenue. Under the new accounting standard, those leases are now placed on the city's balance sheet. And so you have a right to use asset with an offsetting liability. It doesn't necessarily impact the income statement or the revenue and expense. Those tend to net out with the new lease standard. Really what it does is gross up your balance sheet. All right, now if we can go to page 14 and jump right into the general fund. Okay, so what I want to point out here is just focusing on the general fund column. If we go to the bottom of the page, we have a fund balance section. So the city did end the year with a general fund balance of $13.1 million. And as you can see here, we have a few different categories where fund balance is classified. And the first being, it's what we call non-spendable, and that would be assets held for resale, which would be the tax reversion properties. We have some prepaid expenses and then a long-term receivable from the motor pool fund. And as you work your way down, you can see the vast majority of that fund balance, about $10.2 million, is in the committed section of fund balance. And we have 6 different categories of committed fund balance, and these are all in accordance with the city's fiscal management plan. And so these are all calculated according to that plan and were approved by City Council via resolution, I think, back in May or June. Jump to page 16. Here is our general fund statement of revenue, expenditures, and changes in fund balance. And if we look at total revenue of $26.1 million, that is up about 2.3% from last year. And if you were to compare this year's financial statements to last year's, the 2 areas that would jump out would be the state shared revenue amount is up considerably from last year, and the fines and forfeitures from the district court are up from last year as well. Everything else was either up a little bit or down a little bit, but those two categories really made up the bulk of that increase. On the expenditure side, the city did end the year in the general fund with expenditures of $24.9 million. That's actually overall down 3% from last year, but one thing to keep in mind is that last year included the $1.3 million fire truck, which would have been an expenditure last year. So if we back that out, I think it was a 2.5% or 3% increase overall. So across the board, pretty much inflationary increases, or really less than inflationary increases on the expenditure side too. And moving down, third line from the bottom, the general fund did add $1.2 million in 2022 to fund balance, and that is favorable when compared against the amended budget, really largely due to unfilled open positions. And as I mentioned, we had a couple of those revenue categories that were net almost $900,000, $1 million over budget. So the combination of those two did result in that favorable variance. So now I'm going to skip to the slides that cover the general fund here, if I can figure it out. Okay. So as you can see here, we have the three-year trend for general fund revenue. And as I mentioned, the two that really stand out, it's hard to tell on the slide because if you were to look here, the state and federal that are combined are actually down a little bit from last year. But if you were to break out federal and state, the federal is down a bit compared to 2021 because last year we had the CARES Act funding. It's the state on its own that's up $700,000 or $800,000 from last year. And then as you can see here, the fines and forfeitures are almost up $1 million from last year. And on the expenditure side, again, overall down 3%, but when we factor out the fire truck purchase from last year, it was actually a 2% increase. And all of these were within budget, and nothing really stands out when you're looking at this three-year trend. Then overall fund balance, again, the city ended the year at $13.1 million, which was an increase of $1.2 million from last year. And as you can see, again, excluding the fire truck, the city's done a nice job of managing the expenditures. That we overall pretty slow growth over the past 2 years, and you've done a nice job of maintaining, or in the case of this year, increasing fund balance in the general fund. Here is what I just talked about, but in a different view, just looking at the fund balance categories under GASB 54 compared to last year. You can see that the non-spendable is pretty consistent with last year. The committed fund balance is down a little bit, but again, that's based on a formula that's pretty specific within the city's fiscal management plan. And then the remaining balance this year in the unassigned fund balance category, which is really what's left over to spend at your discretion, did increase by $2 million, and that's largely due to that committed fund balance being reduced by $800,000 on top of the $1.2 million net fund balance increase this year. So we'll jump back to the financial statements, and if we can go to page 18. So here we have our, what I'll focus on this page is the water and sewer fund, the first column, and just a few observations looking at it at this point in time as of June 30. The water and sewer fund does have strong working capital. So if you were to look at your current assets compared to your current liabilities, you have a pretty strong current ratio as well. Going all the way to the bottom, the fund did end the year with $14.6 million in unrestricted net position. One thing that you can't see on here that I wanted to point out is that the city does have the ready to serve fee that's charged, that's really designated for capital improvements. So there is $8.6 million accumulated for capital work that's included in this. So if we factor that out, there is about $6 million of unrestricted net position that's really left over for operations. And so there is a reserve there, but if you go all the way back to the top and look at your cash balances, the cash and investment balances are right around $9 million. So a lot of that is actually designated for capital because of the accumulated ready-to-serve fees. So from a cash standpoint, there's not a lot left over for operations, but a lot of that reserve for operations is really sitting in the customer receivables. And so as those are collected, you're building up that cash reserve for operations. Okay. And then on screen here, just to show you the last 5 years in the water and sewer fund, you can see that so we have 4 categories here: the operating revenue, operating expenses, working capital, and cash and investments. And the operating revenue, you can see it goes up and down each year, but it's relatively steady over the last 5 years. The operating expenses, though, have continued to increase by inflationary amounts, so there's nothing too out of line here, but they are climbing, which is what we're seeing elsewhere as well. Working capital continues to be, like I mentioned, pretty strong, so that's climbed over the years, again, largely due to that ready-to-serve revenue that's being collected. And same with the cash and investments. Those have gone in the right direction too. If you recall from 6 or 7 years ago, this was actually in the negative and having to borrow money from the general fund. So we've certainly climbed out of that hole and are in a better position today than we were.
What percentage are we at? Or, we've talked about, what was it, we wanted 20 or 30% of the expenditures free for operations. Is that right, Randy? Where are we at? What's the status of that then?
If you exclude the amount available for capital, we're only at about 14% of operating.
Which numbers up here? Let's see, how do we figure that out? Or is that not figured?
No, it's not broken out up here.
Yeah, the capital numbers are included in all of this. So I think we'd probably need to break that out from non-capital operations to get a better picture of that.
Okay.
All right, I'm going to have you jump all the way to page 41. And this would be the capital asset footnote. And really what I wanted to point out here is just the city's continued investment in its infrastructure. So the top 2/3 of this page would be the governmental activities. This would be basically everything that's not water and sewer. So that would be largely, as you'll see here in the middle column of the column headers, additions. We had $3.8 million of additions this year, largely to the roads. There was some equipment purchased, but you can see between the $3.2 million on the roads line and then the construction in progress, which is roads and sidewalks, that makes up the bulk of the additions this year. And then the bottom third of the page would be the business type activities, which would be the water and sewer fund. And there was $5.2 million invested in that system this year. So overall, about $9 million invested in infrastructure and equipment. If we want to jump again to pages 65 and 66, I'll just touch on the legacy cost. Okay, so on page 65, eventually this will be a 10-year history of the city's net pension liability. We implemented a new standard in 2014, so right now it's just 8 years of history. But if we just focus on 2021, And I'll work really from the top down. So it starts with the total pension liability as calculated by the actuary. And you'll be able to see the total pension liability end of year balance is $96.7 million. So that's the city's total pension liability. And then as you work your way down, you'll see a line titled Plan Fiduciary Net Position. Those are the assets on hand at MERS to cover that liability. And at December 31st, which is MERS year end, so that's what we're reporting on for this schedule, the assets on hand were $53.6 million. So there is a $43 million net pension liability that the city does have recorded right now. That does come out to a 55% funding level. And I think it is important to note again that this is as of 12/31. So this actually wouldn't even include the downturn that we all experienced in Q1 and Q2 of 2022. And so I would guess if you were to remeasure this at June 30 or even as of today, that fiduciary net position would be less than what it is, and your net liability would be higher. This also doesn't factor in any future discount rate changes approved by MERS. And so if you go back 5 years, 6 years, they've had a couple, 2 or 3 discount rate reductions. I don't think there's anything planned in the near future, but certainly the trend that we're seeing across the country is that those rates are coming down, not going up. And so I wouldn't be surprised if in the future we do see small reductions in that discount rate, which will further drive up the liability as well.
This page doesn't keep track of the discount rates then?
If you look at the next page, actually we do show a history on, sorry, let me find it here. On page 74, we do say we have to disclose anytime there's a change in assumption, whether it's pension or healthcare. We do disclose it here, so you can actually see on 74 they reduced it in 2015, in 2020, and then again in 22. Actually, this year there was a small reduction, but it was actually it's your fiscal year 22, but it's there because of the lag. It's really a year and a half ago for them. And then on page 66, this is the 10-year history of city contributions to the pension plan. And what I wanted to point out here was, if you're looking at 2013, the city's actual contribution was $2.7 million. 2022 was over $5 million, so not quite doubled, but pretty darn close to doubled in 10 years. And based on if we look at the slide on the screen here, based on the projections from MERS, which does not include recent investment performance, in the next 5 years, the city will be pretty close to $6 million in annual contributions. So that trend will likely continue to go up into the near to immediate or intermediate future. And then on pages 68 and 69, we do have similar information for retiree health care. Some better news on this one. So on page 68, again, we have the history, and looking at the 2022 column, if we start at the top with total pension liability, we did start the year with a liability of $38.5 million, and the liability at the end of the year is $25.6 million. And if you work your way up a few rows, you'll see a changes in assumptions. And based on some of the changes that council approved this year to healthcare, the actuary did estimate a $12.6 million reduction this year in the city's total OPEB liability. So that's a pretty substantial decrease in the liability in 1 year. And going down towards the bottom, what that did was increase the funding from 27% last year to 39% this year. So pretty.
This would primarily be the HSA change.
It was also the big thing was moving the retirees to the higher deductible. So we got rid of basically the old $2 drug copay coverage and moved them to the Community Blue 4.
Okay.
So that took effect January 1st, which is then reflected in the June numbers.
Okay.
And then on page 69, again, for OPEB, a schedule of city contributions. These have actually gone down over the past 10 years as the city's funding levels have gone up. And the reason these don't have the same trend as the pension ones is because we're still on a 30-year amortization schedule here, level dollar, meaning that it's consistently every year getting amortized over 30 years. So it would make sense that these contributions will stay relatively flat as you move out into the future. But if you were to take just in 2022 the pension and the retiree health care contributions, it was just about $7.4 million, which is almost 30% of the city's budget on just pension and health care. So it's a pretty substantial piece of the budget that you're talking about here. Any questions on the financial statements before I move into the letter? Okay, hearing none. Okay, so everyone has a copy of the letter addressed to the mayor and council as well, okay? So I won't go through the whole letter. I will go through a few areas though, mainly the first few pages. So it's broken up into 3 sections. One would be any internal control items that we identified during the audit. I will cover that section. Section 2 would be required communications that we have to have with mayor and council. So if we had any disagreements with management, any issues during the audit not identified in section 1, that's where we would discuss those items. And then section 3 are legislative and other informational items that I won't cover tonight, but I would encourage you to read through if you haven't already. So on page 2, I'll cover section 1 first. We did have 3 findings that were concluded on as part of the audit. A couple of these are recurring items from prior years. So the first one being the timely preparation of bank reconciliations. So if you go back a year ago when we were here presenting, we had a similar finding that the bank reconciliations during the year, though they were ultimately completed and reconciled, they weren't done timely. And we did uncover the same issue in 2022, because what we're required to do is not just look at the year-end bank reconciliation. We have to make sure that that control is in place throughout the whole year. So we pick months early in the year, in the middle of the year, end of the year. And we weren't surprised to see that the ones earlier in the year weren't reconciled timely, because when we worked through the issue last year, it was already November and December. And so we were already halfway through the city's fiscal year at that point. But what we did find, though, is that December or January on, they were completed and reviewed timely. So this would be one that, assuming the process stays as is and bank recs are completed timely from here on out, I wouldn't expect this to repeat next year. Second one relates to payroll, and it's really a segregation of duties comment, because what we found, and this is another repeat from last year, but what we found is that there's an individual that is able to add employees to the payroll system as well as edit certain banking information as it relates to payroll. And we've talked to management about this, and it's been determined that it's just not practical to fix this issue. In an ideal world, you'd have more resources, more staff, where you can segregate every duty appropriately, but that's just not the reality. So this is one where Randy and team have looked at the controls and determined that there are mitigating controls in place around the payroll process with the different reviews of the payroll information of the timesheets. But we just need to, because there is a segregation of duties issue, we just need to continue to bring that to your attention. And then the third one, again, the auditing standards years ago set the bar really low as it relates to journal entries that we proposed during the audit. And anytime we come in and find anything that needs to change within the financial statements, we need to report it to you. And this year we did have 2 relatively minor changes as it relates to the claims liability, which is based on information received from MMRMA, and then a relatively small journal entry related to a DDA tax capture. So again, not terribly significant, but because we had to propose journal entries, we have to bring that to your attention. On page 3, The last paragraph under the first heading, our responsibility under U.S. generally accepted auditing standards, we did note that investment reports weren't provided to City Council on a quarterly basis. So that would be against Public Act 213 of 2007. So we have to bring that to your attention. As I mentioned, if there were any other disagreements during the audit or transactions entered into in the wrong year, we would cover those in this letter as well, but we didn't have any of those. We had no issues throughout the audit. The only other item that I would mention is on page 4. It's about in the middle of the page. We have a corrected and uncorrected misstatement section, and this would be consistent with prior years as well. But with the 38th District Court, there are certain activity at the court that's not included in the city's financial statements, and that would be the remaining balances in their general account and what's in this court's bond account. According to the accounting rules, all of that activity would be factored into the city's financial statements. It wouldn't have an impact on the bottom line. It would really be a gross up of the cash and liabilities. But because that information wasn't readily available to the city, it's not included in the financial statements. It's not a finding or anything, but it is something that we need to include in this letter and bring to your attention, that, just to let you know that that information is excluded from the report.
What would it take to resolve that?
So to resolve that, it would be getting the information at June 30 from the court, and I would say not just getting the information, but being comfortable that the information is accurate and can be relied upon.
Okay. Thanks.
So that's all I wanted to cover in the letter. Again, happy to address any questions that you may have.
Does council have any questions? No one has any questions. Thank you very much for coming out and presenting it to us today. And I guess we will move on to item B, which is to schedule the capital workshop. You want to table it to the next meeting, the next regular meeting? Oh. So, I guess we're discussing that at our regular meeting at 7 o'clock. So I will move on to item 4, which is mayor and council reports. And we'll start this evening with Councilman DeMonico.
Thanks, Madam Mayor Pro Tem. Just want to say thank you to Plant Moran, especially Tim and Randy and crew in the finance department. That's all.
Councilman Baker?
Yeah, I'll echo Councilman DeMonico's words. Thank you to Glenn Moran. And, excellent job by our finance department, as always. And we don't want to miss Danielle over there. We welcome her to our meeting today.
Oh, I didn't even see her over there.
Oh, that's what happens with
Right, yeah, I know. She's over there somewhere. Councilman Curley?
I have nothing.
And yeah, I'd just like to thank everyone also, especially city administration, for working with Plant Moran to make sure that this was a smooth process for them and for us. That's all I have, so at this time, I'll adjourn the meeting at 6:28.
So moved.
Yes, that's right. Motion to adjourn. Motion to adjourn.
So moved.
Call the roll.
Mayor Pro Tem Lucido,
Yes.
Councilmember Baker,
Yes.
Councilmember DeMonico,
Yes.
Councilmember Curley.
Yes.
All right. Meeting adjourned at 6:29.